Hello traders, today we're going to look at some trading action on the US Dow Index. As always, we're going to talk about how to prepare for the market open, how to read the price action, and we're going to look at trading opportunities that arose during the trading day. And that day was the 4th of October 2016. So I'm going to give you insights into my own thinking as a trader as the day progresses and talk you through the trades that I see. I'll also tell you how to set targets and stops and entry points for each trade. My aim in trading is to be consistently profitable. For me, this means successfully managing my trades, managing my emotions whilst I'm trading, and managing my trading capital. And if you do these aspects successfully, then you'll also be profitable in your own trading. These are the things that I work with our students on during our trading training courses. We're looking at the Dow 5-minute time frame at the moment, and this is the time frame that I choose to do my day trading. The only indicator on my chart is the 20 EMA, and I use the candlestick bars on my charts to help me read what's going on. I do like to keep trading simple. Before trading a market, I like to gain perspective. I like to gauge what the sentiment is in the market. And to do that, I'll look back on my charts at the most recent price action. Market opens tend to have some good trading opportunities, and there tends to be quite a bit of volatility in the market as both the bulls and the bears attempt to set the tone for the day. As the initial battle between the bulls and the bears takes place, the market will often set off in one direction and then reverse. And so I'll look at the pre-market action in order to gain an idea as to where the likely reversals may take place. The US markets open at 2:30 UK time, so that's where we'll join the price action here on our chart. I trade all of the markets the same, and first of all, I'll establish what sort of phase the market's in. So looking back over the pre-market action, I can tell straight away that the market's been in a trading range. And I can tell that because price action starts in the middle of the chart on the left and ends in the middle of the chart on the right. As I say, I like to keep trading simple. And in between the left and the right of the screen, in the middle, it's basically gone up and down between the two levels. And the levels are 18,240 and 18,300. As the market's in a trading range phase, I'll expect it to continue to go up and down between these two levels, at least for a while. Statistically, a market is much more likely to bounce between the extremes of a trading range than it is to break out of a trading range. Obviously, eventually a breakout's inevitable. However, hopefully we can get some good trades in the range in the meantime. I'll therefore be watching initially what happens when price gets near to the 18,300 and the 18,240 levels. If it gives signals to say, well, I'm going to reverse, then I'll be looking to enter a reversal trade. And so I've drawn these levels on my chart in blue. Then I like to gain a slightly larger perspective because this will give me a better idea as to what the overall market sentiment is. So over the last couple of weeks, what's been happening? Let's have a look then at the 2-hour time frame to get that perspective. And again, we can see that the market's been in a bigger trading range, 18,450 being the top of the range and 18,050 being the bottom of the range. And round numbers are important in trading. And I've drawn these levels on my chart in orange. Lastly, in my preparation, I'll check out the market closing price for yesterday, which in this case was 18,253. And this level goes on my chart in gold. And this level's important because traders will expect this level to be reached at some point in today's trading. In this case, there's only a small gap between where the market's opening and where it closed last night. So I'll expect this gap to be closed during the open today at some point in time. Right, so we're now ready for the open, and the last few candlesticks have been bullish, and the market is currently swinging upwards. It's roughly in the middle of our trading range, and I never trade from the middle of a trading range, only from the upper third or from the lower third. So we'll wait to see what happens. Okay, so the opening candlestick, which I've labelled 1, hits the top of the range and then it pulls back. So what we're looking for now is a signal candle. And whenever I trade, I look at two things: a good context and a good signal. And so we've got context because we're up at the top of the range, and what we need now is a good signal. So I'm looking for bearish reversal bars and small inside bars. And the next bar, which is 2, produces an inside bar, and it fits inside the high and the low of the previous candle. It's a bullish inside bar though, so it doesn't act as a trade signal for me. Bar 3 is another bull bar, and bar 4 is a reversal candle. It's got a bullish green body, but it is a pin bar and a reversal bar, and it's right on the upper resistance level of the trading range. So bar 4 is a signal bar, and I'm now looking for price to fall below the low of bar 4 in order to trigger a short trade entry, and I'll be hoping that prices will fall. It will be a low risk trade because my risk is small. I'd be placing my stop above the high of bar 4, and I'd be looking for a trade of at least a 2-to-1 reward to risk. Bar 5 is a small inside bar, and it doesn't trigger my trade. Bar 6 has a high above bar 4 high, but it is a doji candle, and dojis indicate pause and they indicate indecision. So at this stage I'm still waiting for price to drop below bar 4 to trigger my entry short. There are two other important things worth mentioning here, and they are that, well, the first one is that there are trap bulls at the top of bar 4, and they're in a bull trap, and they're trapped because they're long above the resistance level, and if price goes down from here, then they can't get out of their trade unless they accept a loss. And the second thing is that bar 4 and bar 6 have produced a micro double top. They have peaks at similar levels, and price has pulled back from that level twice. Both of these aspects add to the probability of a good move down, as the trading will become more one-sided for a while, with bulls exiting losing trades and bears getting short. On bar 7, price falls below bar 4 low, so I'm now in my trade and I'm expecting price to fall. My protective stop is above bar 6 and it's 20 points away from my entry. I'm looking at a target for my trade of at least 40 points. And as I look below, I can see the golden line indicating yesterday's close. This is about 40 points away, and it seems like a reasonable target for this particular trade. So what happens next? Well, within 2 bars, we've got to our target. So that's 40 points in less than 10 minutes. And that's the first trade of the day complete. So obviously I'm sitting happy in my chair at this stage, and it's always good to get off to a good start to the day. However, I'm on alert because price is at the bottom of the trading range, and that's a good context. So I'm now looking to see if we get a signal that the market's going to go back up. And bar 10 is a reversal bar. Bar 11 is a small bullish inside bar, and that's perfect. If price goes above the high of bar 11, then I've got another low risk entry, and this time it would be a buy entry. Bar 12 goes above bar 11 high, and I get long into the market, and this is my second trade. I place my protective stop below the low of bar 10, which is the swing low, and I set my target to the top of the trading range. And so this time my risk is 25 points and my target is 50 points away. So there's a good trader's equation on this particular trade. And this time it takes 3 bars to get to my target. So that's 50 points in 15 minutes. And let me tell you, the money is great in trading as long as you can figure out what's going on. I'm on alert again now because I'm not resting on my laurels and price is at the top of the range again. So will we get another reversal? Bar 16 is a small bearish inside bar. Bar 17 is a bearish reversal bar. So again, I'm looking to go short below bar 17. And the other thing to note at this point is that if price does drop from here, then we've got a double top right at the top of our trading range. And I'll not be the only one who's spotted this. There'll be hundreds of thousands of other traders and computers seeing the same thing, and they'll be waiting to pounce. So what happens next? Let's have a look. And so 2 bars later, we've got our target again. And the last of those particular bars that took out the target on the way down is a huge bearish trend bar. And as you can see, the huge bearish trend bar actually ends at the same level as the bar 10 close. So potentially we've got a double bottom brewing here. Let's have a look and see what happened for the rest of the day now. We've had 3 excellent trades. So the double bottom didn't trigger. In fact, the market fell even further. And the fall ended with a 2-bar reversal. And that's a trade signal. And it triggered by the next bar rising above the green bullish trend bar, which is the second bar of the reversal at the bottom there. Didn't take this particular trade. However, would have been okay, would have worked out okay and had a good trader's equation. The market went up to near the top of the range again. And then, as you can see, what happens next is that price actually starts to be squeezed lower. And we're at the bottom of the old trading range here, the trading range that we've been using for our trades so far. So we're at the bottom, price is being squeezed lower, and it's been squeezed lower by the 20 exponential moving average. And when this happens, the chances are that price is getting ready to break out. So eventually, as you can see, the bears won through on this particular squeeze and price did go lower. And it went lower. And it was signalled, the breakout was signalled at the beginning by 2 inside bars. And these inside bars were followed by a break lower. So the lows of the inside bars were broken by a bear move down. And that was the beginning of the breakout from the trading range. And so when you see that happen, you've got to trade short. And so the market fell, and the market fell to 18,120 before pulling back slightly. And again, you've got a mini 2-bar reversal at the first bottom there before the market pulls back to the exponential moving average. So it pulled back to the exponential moving average, and at the moment we're in a mini bear trend. And when you're in a trend and the market's broken out and it visits the EMA for the first time, then the chances are that price will resume its old trend. And most experienced traders know that, and therefore when the price came back to the EMA, they'll have been waiting to pounce. You get a bearish reversal bar and price went lower, and it actually made a second low there, which is a lower low, and you got a mini 2-bar reversal at the bottom there. So you've got a double bottom with a lower low, and you've got a 2-bar reversal, and you could take the trade up into the close, and the market did go up into the close, crossed over the 20 EMA and zoomed up the other side. And that was our trading day. So I do hope that you found that useful. If you'd like to read the markets, if you'd like to have these professional trading skills and take money from the markets, then please do join us on our day trading and swing trading training course, and that's inside the Excellence Assured Trading Academy. My name's Anthony Beardsall. As I say, I hope that you've found this useful, and I'll talk to you next time. Thanks for joining me.